going on, guys? This is going to be our first recap video. Just kind of demonstrating the strategy and showing what trades there were in the day, and just kind of how Clay and I saw the market. The great thing is I know a lot of you guys today were using the strategy perfectly. I mean, you guys were perfect fib levels. I mean, you guys just read the market beautifully today. So great job on that. So let's just get into it. First thing is the market opened up at 9:30 right at this level here. Now, the way that I saw this is I actually saw the market here as one leg pullback, and then you see this long wick here. I actually saw that as two moves, and it also kind of like spiked and later on made into a channel. So I wasn't really sure if I should use Fibonacci at this level or at this level, but what I kind of did is I was just like, hey, you know what? Let's draw the level here. Here we can see rejected at the 6-1 level. So I was like, okay, perfect. We already got the 6-1 rejection level early on. So we'll just count this as, the first push. Right. So if we draw our Fibonacci levels after our first leg here, we can see that we have our first 0.618 rejection level right here, which offers a fantastic setup. Easily, guys, you can get 2-to-1, 3-to-1 R on this trade, as well as, a thing I always keep an eye out on as well, because I'm going to be dropping two videos today. Another one's going to be a take profit system. You can see it hit the negative 2360. That's very, very important as well. So not only could you get your 2-3R here, but this trade also worked for the technical perspective of retracing and hitting the negative 23.60 take profit zone. So a beautiful trade here. Great trade for anybody that took that. Then we have our next leg, which is our push up here. Right, another impulse push to the upside. If you draw your 100% down here, your 0% up here, the next great trade is you can see the market pulled back again to this negative 61.8 area here. Now we are about a point away from it, but again, anything between that 50 to 61.8 is pretty much good. Obviously here I think we're only like what, a tick away. So I mean that's perfect. It also turns into a nice reversal bar. Yes, it closed where it opened. However, you can see these type of bars are closed one tick from its high. You could also see by this long wick, it was once a bear bar that turned and closed on its upper 1/3 right at that 61.8 level, right off of this trend line as well. So, I mean, it doesn't really get much better than that. I mean, there's so many key entry points, so many key entry points and logical reasonings to take this. It's also a first entry, second entry. I mean, this is a golden trade right here, following perfectly with a 6.18 fib rule for measured moves. Now, taking a look here, we get this channel working up here. I didn't really see anything to take using measured moves or fibs in this red channel here. Now, the next trade would be this red arrow area here. Now, it's very easy to get trapped here if you're just using PT's limit order method. I know I've gotten trapped doing things like this before. 2 legs down, blindly buying with a limit order. There's a few reasons not to take this trade. One, we're nowhere near the trend line. We're still a few points away from it if you drop a limit order there. But two, if you think about it from an algorithmic perspective, right? And you draw your Fibonacci retracements, in order to get a 61 at this trend line area, the 100% would have to be this low right here. Now, I don't think the algorithms are looking at that as a low. Now, could I be wrong? Of course. However, I think it's a much higher probability for the algorithms to be looking at this area, right? The previous blue arrow as the Fibonacci low and retracing it point here to the high. So that's one thing that could have saved you from taking those 2 legs back. That's why I didn't take it. Because if I was going to use the fibs to determine, hey, is this a level I should get long at? If it disagrees with 2 legs down, you got to ask yourself why. And most likely, right, there's some algorithmic thing that's happening in the background that doesn't align with, the trade that you're taking, which would be these 2 legs down, taking this trade right here. Now, granted, it if you took it, it did go up. Maybe, I'm not sure, depending on your profit target, you could have got it. But realistically, if you buy here at the blind limit order, max you can get here is 1R. And that's assuming your stop is below the signal bar, which a lot of times in PT strategy, it's not. So you probably actually lose that trade. And that's a thing that can help you stay out of those trades. Always ask yourself, hey, what are the algorithms probably using for their swing low? And it's going to be this impulsive push here, which is this entire red channel, right? It's probably using a low of there and then a 61.8 pullback, which happens later on. But we'll get into that later. And that's why I didn't take that trade. But again, if you're using a good R2, 3R, I mean, if you want to try it and see if it works, you're more than welcome to. Now, the next trade I saw here is actually, I started counting the first push here. Just kind of this as a double top first leg down. Now, using Fibonacci retracements, and again, the reason why I counted this as 1 leg down is because we saw that there is a desire, and Ace in the group chat did a fantastic job of this, of saying 61.8 Fibonacci zones are magnets, right? And this is 1 leg down, and we go back up. Well, we probably want to get to the 61.8 zone, which is why we got these 2 legs down here. Ace was like, we're probably going to get a second leg down, which he was 100% right. That's exactly what happened. Why? Because these 61.8 zones are magnets, and this is the last higher low in this trendline sequence. So most likely the algorithms are seeing that as a 0, and it's exactly what happens. Now, this trade here, if you put this here, got this backwards right here, you can see we get 1 leg back, we pull back, and we bounce perfectly off the 50% zone right here. Target profit would be that negative 23.6 zone, or simply a second leg of the green line, which is exactly where we go. So it's a fantastic short. I think a lot of you guys actually took that short, so fantastic job on seeing that. Now, another trade. This is the trade that I took. I saw 2 green legs down, so I did take a long right here at this blue arrow here. I did get stopped out here, but I re-entered on this bullish candle here. I had a profit target on this trade of 3R. I should have just went for 2R, got a little bit greedy. But either way, I got out a little bit earlier on this trade because I was worried about making a new low. Not the best trade idea. Could have managed that a little bit better, but I am coming out with a new strategy I'm going to release today as well, which is going to go over how we can ensure we lock in profits early, but also get nice big moves as well. I believe Daniel took this trade, beautiful trade. We get 2 legs down to go long right here at this area. Very, very nice trade. Another thing is as well is it also lines up perfectly with our fib numbers as well. So we get 2 legs down to our 61.8. Yes, we do overshoot it a bit. However, having these 2 legs down, the market's going to make probably an equal move to the first push down, which is why we do get a bit of an overshoot. And again, if we get 2 legs down after a trendline break, our target is most likely going to be new highs. So getting into this trade with at least a 2-to-1 is a fantastic idea because we know there's a good probability of going to make a new high. Now, another trade here is going to be this red arrow here. I believe Ace took this trade. Fantastic trade as well. If you use your Fibonacci sequences, we do get a perfect 1 leg, this blue line here, pull back right off this 61.80 area to then make a second leg continuation. Okay. Now, in terms of target profits, Ace and I were talking about it in the group chat. He did get right out this area because he saw a triple test, which is a fantastic idea. In these areas, it's always a gamble. One, because when you get those triple tests, when you get those pullbacks, there is a likelihood that prices will come back and stop you out. At the same time, we do have this one blue leg pullback, second blue leg, and we are expecting that second leg down, and which we do get, because if we do wick below all of these bull bars here, I mean, there's a lot of buyers that are going to have their stops below these areas, right? Especially because they saw one leg pullback, two legs, right? They saw the same thing that we did, and they probably expected overshoot of the channel. We might get a straight up reversal to make a new high. So it's very logical for traders to get long in these areas. So if we do happen to break below, we're going to run their stops. Now all of these buyers need to sell their positions, and then that's how we get this impulsive move to the downside, which not only aligns with our 61.8 trade, but it also aligns with our two legs down. So this here is an absolutely beautiful trade as well. Tons of reward in this trade. Easily go for 2, 3 R on this trade. Now our next move, now this is a little bit riskier. Now I took this higher low here going for 3 to 1. Unfortunately, I got stopped out. I missed my profit target by about 4 ticks. But again, I'm making some adjustments to that. I'm going to release the strategy for you guys a little bit later. But we do get 2 legs down, right? And we have 1 leg up. So we know when we get 1 leg up, 2 legs down, there's a probability that after the 2 legs down are met, we're going to get 2 legs up. So going long here is a very decent spot. Why? Well, because we've already had big picture 2 legs down. Then we have 1 big leg up, 2 micro legs down. What's most likely going to follow? A continuation of the bull trend, expecting a new high. Okay. Now this one, of course, is riskier. Maybe you buy on the bull bar and get a bigger risk. I mean, this is 7 points. It's a pretty big bar. However, I know on ES, it's kind of like the standard of what you guys use anyway. Maybe you put a stop order right above the EMA. If it ticks you in, you go with it. But again, this was a very logical trade for me, especially, if we have 2 clear legs back equal size before immediately getting rejection off of that level, and we know we need a new high, it's probably a trade that's worth taking. And that's really all the trades that I saw for today. I'm sure there's some smaller 6.18 Fibonacci trades that you could have taken. But I'm more looking for the big moves. I don't like to take trades where I don't have much room to get out of. I want the bigger moves. Again, I'm looking for a stress-free trade experience. You can see every trade that we took here at least gave us 2R. And not only did it give us 2R, but there were also pretty good probability trades. And when you get good probability trades with pretty good R, I think that's going to create a much more stressless environment and trading career. And that's really what I saw today. If you guys have any other questions, feel free to reach out in the Discord. I think this is going to help some people in the group that are still trying to understand what we're doing, as well as I love doing this because, I'm also learning as well. Every day that I do this, I kind of have to re-go over my trades. Didn't have the best trading day today simply because none of my 3R targets were hit, but every single one of my trades hit 2R. So again, that's just an adjustment that I need to make. But again, I'll be releasing a strategy a little bit later that's going to kind of fix that problem that I think you guys will really, really love. If you have any questions, guys, feel free to reach out in the Discord. Clay and I hang out there pretty much all day long. All right, I'll see you guys soon.